In March 2020, the stock market hit record lows in the middle of the coronavirus pandemic. While a bounce was expected after such a steep drop, nobody really thought it would last, but it did. From March, stocks have only gone up, so much so that as of this video, the S&P 500 has reached new highs while the pandemic still rages on. With so much uncertainty, it can be hard to determine which stocks are a safe bet for your money. Well, let's look into that. Here are the 5 best stocks I'm watching to buy in December 2020. Wix is currently trading at or around its low for the past 3 months and is in a good position to take advantage from continued online growth in light of the pandemic. If you don't know, Wix is a website used to create websites and was founded around 14 years ago. The website is extremely user-friendly and even offers free websites to attract new users. In an article by Yahoo Finance, Nat Schindler wrote, "We see a big opportunity for Wix to continue its strong momentum as businesses shift online. Wix's commitment to maintain its aggressive marketing push should ultimately lead to a significant revenue expansion opportunity in out years. We expect 2020 marketing efforts will leave Wix in a strong position heading into 2021. I think this really hits the nail on the head. Wix has continued heavy digital marketing efforts, which I believe will continue to drive new users. Not to mention, I believe the state of the workplace is forever changed with coronavirus and that more and more businesses will need to operate online. So if we take a look at the Wix chart here, you'll see that the stock price is currently trading at about $250 a share. If we go back to the 5-year chart, you'll see that over the last 5 years, they're up roughly 1,000%, that's pretty insane to think about. Especially here when COVID hit, they really took off with all the new growth in online activity. Another thing I want to point out quickly is that if you look at the 3-month chart, you'll actually see that they have been trending downwards for about the last 3 months, so there maybe is a good buying opportunity right here. Boeing took a dive like all travel companies when the pandemic hit the United States. After a brief bounce off its lows in March, it reversed course and began trading down once again. Now, with the approval of the 737 MAX to fly again, and with a COVID vaccine looking promising, the stock is rallying. In an article, we see Copeland, for his part, wrote quarterly earnings were more of the same, arguing that although things aren't great, everyone knows it. He still rates shares as a buy and has a $260 price target. Copeland believes investors will warm to Boeing stock as conditions start to improve in 2021. So this is basically how I feel about Boeing. I think that while they are certainly hurting and will likely not fully recover for a few more years, everybody knows this, and the company is working hard to bandage the wounds and stop the bleeding while things slowly return back to some state of normalcy. Not to mention, I think with a COVID vaccine, things will soon begin to return even faster. While we may be in another COVID spike right now, over time these spikes will lessen and air travel will eventually resume. It may take a while, but Boeing will recover and are a long way from previous highs. So if we take a look at the Boeing chart here, you will see that they are currently trading around $202 per share, and they've kind of been up and down all day, so when you see this video, the price may be different. If we take a look at the 1-year chart here, you will see that they took a dive from COVID and they honestly never fully recovered. They had a few spikes, but they eventually just continued to trend downwards. Now could be a great time to buy Boeing. If we look at the 5-year chart, you'll see where they have been in the past, about $430 per share, or actually $450, and currently we are less than half of that. So NIO is a stock that I've grown much more bullish on over the last few weeks. They are an electronic vehicle maker based out of China looking to directly compete with Tesla. They are a very new company, but their technology and cars are promising. Not to mention, all the hype around this company is just too hard to ignore. The key difference is their battery swap stations, which is exactly what it sounds like. This saves time from charging your car like you would a Tesla. And NIO already has over 150 battery swap stations all around China. They just had earnings and did slightly better than expected, even with a worldwide pandemic going on. Currently, they are mostly sold in China, but plan to expand to Europe early next year. If we take a look at the chart, the stock is already up quite a bit year to date, but who's really to tell where this will go? Electronic vehicles are already extremely popular in China, and that is a trend I think will continue and will expand out into other parts of the world, in the West more particularly. Even if we never go fully electric, someday in the future, electric vehicles will make up a decent share of the automotive industry, and NIO is positioned to take good advantage of that. Apple is a company that everybody knows about. Since its inception, the company has been a powerhouse in the technology industry, coming out with the most cutting-edge products with stellar branding. Now, nearly everybody has an iPhone, and I don't see that trend ending anytime soon. While iPhone technology may not be advancing as rapidly as early models, I believe we are still in the early stages of what smartphones will be capable of, and Apple is well positioned to take advantage of that. If we take a look at the Apple chart here and go to the 1 year, we'll notice that they are actually kind of far away from their highs. Their highs were back in early September, late August, of about 130, and of course they did do a stock split this year. While they are still up 78% year to date, I think like most other companies on this list, they are in a position to continue rising in the future, especially with everything going on with COVID, and by the simple fact that everybody has iPhones, they're not a company that's going to be going away anytime soon. As I previously mentioned, with everything going on with the pandemic, I think Apple is easily the most well-positioned company to grow even more than it already has, with more and more businesses being basically forced to go online in some way. We already have seen this trend in China, where the amount of online services are far greater than the States. I think that this is a trend that will grow here as well. Much like Apple, Microsoft is positioned to continue to grow in the coming years. They are a dominating force in the technology industry, and with a wide variety of products and services, will remain that way for the foreseeable future. So currently Microsoft is about $211 per share as of making this video. If we go back to 5 years, you'll see that they are a stock that, much like Apple, just is always on a continual incline. At least that's what it seems. Of course, they have some dips here and there, which really are only good buying opportunities. And if you look at the chart here, you'll see that they are currently in a little bit of a dip. Let's go to the 1 year quick, and you can see here where COVID happened. And then right now, they are really not at their high. Their high was reached in early September, and it quickly dropped down, and they've basically been trading sideways since then. If you're bullish on the future like I am, then perhaps now is a good time to pick up some shares of Microsoft. On this article on Fool.com, Microsoft recently kicked off a new fiscal year with a bang. The now 45-year-old software icon reported revenue and net income of $37.2 billion and $13.9 billion during the 3 months ended September 30th, 2020. Those figures represented respective increases of 12% and 30% from a year ago. Under the guiding hand of CEO Satya Nadella, Microsoft has been able to sustain its decade-long growth story via the cloud, and I wouldn't be quick to bet against the tech giant anytime soon. So this is basically how I feel about Microsoft. Microsoft is well positioned in numerous growing industries such as cloud services, which will only continue to rise in the coming decades. Not to mention all of the other industries where they dominate, such as gaming, and they just released the brand new Xbox. I think Microsoft is a safe bet for the future, without a doubt. If you want to learn more about stocks to buy, then click the link on screen now to check out another one of our videos. Thanks for watching, and we'll see you all in the next one.